Alright, cool. Alright, as long as I sit like right in front of my computer, I think we're looking good. It's still kind of shifty. Alright, damn. Oh, that's because this is shifty. Alright, cool. Seems about even. But we gotta fix this because this just doesn't look right. All right, what's going on, everybody? Welcome to another episode. It's actually been, I think you said what, since April 1st?
Yep.
Since we last did a podcast recording on video. So wanted to do something for you guys here today. Meant to get it out yesterday, but got a little backed up because we're busy. A lot to catch up on, actually. So since April 1st, if you haven't noticed, we've had an office change. So we are on our own team group now. So like I said in the last newsletter release, we have a renewed sense of ownership as we move forward into what we're doing. So that's exciting. Definitely more motivating for me on my part, and I think you as well. You're very entrepreneurial minded, and I think you can see the growth and really like making your own path here. So that's what we're all about.
100%, yeah. Just getting out of the office and kind of interacting with other people around here, just making a name for ourselves and building little connections from getting out of the office. I think already like what we got like what 3 referrals or 2 referrals?
Dude, I mean what I was gonna say next.
Yeah.
Like I think we've got more referrals in the last week or two since we left the team than we've got in like 2 months. So I think that speaks volumes, and it's just nice to see everybody pulling together and coming to support. And it's really kind of created an even tighter group of buyers, and our focus now, we're not being pulled into all these different directions, so that's helped a lot as well for me personally. Cool. So then how do you want to start this off, man?
Well, I had a few questions. I mean, earlier before the podcast you were saying how the shift in multifamily is kind of going down, and I remember like we always have talks about how multifamily properties and investing in multifamily properties is recession proof. So how would you say, like, getting that data and like how would you still say that multifamily is recession proof?
Right. So I mean, if you take a look at where things are at today, there was an article that came out, multifamily sales year over year are down like 64%, and that's due to the rise in interest rates. And because multifamily is deemed as recession proof, when people do go to sell, they're selling at an absolute premium in times of uncertainty, which is why sales are down so much, because multifamily owners value their property so much, no one's selling. So I think that speaks volumes, because if they didn't want it like office space, they'd be trying to figure out how to get rid of it before their loans come due. I mean, I think we got, almost $1 trillion in just office space that's coming due, coming down the pipeline by 2025, I believe. So that'll be interesting to see how that all shakes out. But people are always going to need a place to live. They're always going to need a roof over their head. And if they don't pay, then it's foreclosure. And there's a lot of people moving to Florida. There's a lot of people that are always going to be looking for space. And because there's such a big influx of people, and there's still not enough units for folks, especially affordable housing, it creates a lot of demand, and goes right back to supply and demand. So there's a lot of that going on.
I mean, you were also saying that how like if we stick in this like little niche, that like we're the multifamily guys, that if we ride through the storm, that eventually that it's gonna come back around, and when that time does come, we'll be on top.
Exactly.
Yeah.
And Exhibit A. I mean, we're doing a listing presentation for a 21 unit, you helped harbor that relationship, and I'm kind of taking it to the closing. So we've got a couple different clients now that are we're brokering a deal with for 21 units, and we may potentially get a listing out of it as well. So that's exciting. We're also brokering a listing for 13 units that we've been on and off with for like probably 4 or 5 months now. So that's interesting to see that one progress, but I think that one's coming to a head here sooner than later. Yeah, I mean, there's other multifamily brokerages out there where that's all they do, but there's not a lot of them, and they're definitely not as young and hungry and ambitious as we are. And I think that if you can help folks in that arena, word's going to get out, and eventually those listings are going to start coming your way, because down the line, if people go to exit these properties and they need to sell them, they're going to need a qualified brokerage that can handle that. And sometimes it comes down to the people, and in that case, that's us. Cool. So anything else you had on that?
Yeah, this is a little off topic. I know we're mostly like multifamily, but I always had like this on like the back of my mind, how it's nothing new, but since like the .com boom and like all like the rise of e-commerce businesses, and like how does that transition into the need for e-commerce businesses needing industrial space, and like especially in like the Tampa Bay area, which is such like a high growing area?
Yeah, so it's not just Tampa. You're definitely seeing a lot of those Amazon warehouses being built along the I-4 corridor, which is actually one of the things I want to talk about later. But I heard this on a conference call a while back, and they had said that industrial is the new retail, because people have stopped going to some of these mom and pop places, or places like, I don't know, I mean, like Sears, I mean, they went out of business because Amazon took a large portion of their market share because people just stopped going there. So when people need to stock inventory, where are they going to stock it? They're going to stock it at a warehouse. So, that's created a big demand for that. Definitely not as much to maintain as a retail property for warehouse space. So that's good. It's also long-term tenants, and industrial property owners love long-term tenants. So it's kind of a double whammy there. And it's also very multi-versatile. So if you want to do anything with the space, you can kind of section it off and create multiple bays. So it has a lot of the flexibility factor to it as well. Personally, like, I'm very pro-freedom, pro-America, and I hope that we bring back manufacturing to the United States. So I think that manufacturing, light industrial, heavy industrial stuff comes back, and I think that that's going to add to some of the demand as well. But that takes time. That's not going to happen overnight, and it all comes down to price as well. People are still manufacturing overseas, so we've got to fix our policy on that. But that's another conversation.
It's another day.
So, yeah, man. So that's that. Memorial Day was yesterday. So talking about pro-freedom, a lot of soldiers have died for this country, and that continues to happen all the time. And yet you look in the news and all you see is people complaining about very trivial things when there's very real world challenges that people face. And I was just scrolling through Instagram, and it was literally like at America, and it's just like caskets and tombstones and people with half their face melted off, like they don't even have ears, or like they're running the Boston Marathon with like a prosthetic leg. I mean, it's like crazy stuff like that. And then you wake up in the morning and you're just like so thankful that you have these freedoms that were afforded to go out there and like just do what we do on a day-to-day basis and have that entrepreneurial spirit and the infrastructure to where you can go out and build a profitable business. I mean, there's other countries out there that definitely do not have that. So, I'm very, very thankful for that, and very thankful for all our service members.
Yeah, of course. I mean, as you know, over the weekend I went over to Hawthorne, Florida, where I spent some time with some friends and family, and one of the dads of my buddies, he served in the Army for a little bit, so he was telling us some stories, and he gave a great speech to everyone, basically having everyone know that, like, hey, we're here for a reason. we have people fighting on the other sides and that we don't really know too much or we don't see from. So he told us a story about one of his friends that he served with that recently took his own life because due to PTSD and just overall just mental illnesses. So it is real, you know. What they go through is very serious stuff. So it's just a nice little reminder to know that the day that we are going out on the boats, drinking, eating good food, that like there's a reason behind it too.
It's not just all about the barbecue.
Exactly.
Yeah. So all right. So Sam Zell was a big real estate mogul all through, I think, the late 60s, 70s, definitely the 80s, 90s, and early 2000s, and he was known for having one of the largest exits in 2007. People called him the grave dancer because when properties, businesses became in a distressed scenario, he was always there to scoop them up, and he was known for timing the markets really well. He's a very kind of shrewd, blunt guy, but you know, very, very transparent, and I think he's a likable dude. You know, I learned a lot from reading his biography here, but he passed away like 2 weeks ago now. And it was just really cool to see how he had accumulated all these office properties. He had built one of the largest modular home groups across the country. They were leveraging pension funds, like state pension funds, you know, all different kinds of tactics that they used. And a lot of the philosophy and market, you know, timing that he implemented can be deployed into exactly where we're at today. So that's really interesting. Right now reminds me, in what I read, I was not born in 1989, but in 1989 they were talking about how there's a credit crunch and how the market was starting to feel a little, they call it frothy, and how they went and created an opportunity fund. And we look at Blackstone, and they just closed out the largest private equity fund that has ever happened before. And back then Blackstone was around as well, and they had copied his moves, and they were doing the same thing that he was doing. So I mean, you just see all the big players doing it, and this is not their first rodeo. So I mean, I want to copy exactly what they're doing, and you know, that's why we're looking for different lending partners to go after certain opportunities. And we came across a really, really unique, in my opinion, it's a hidden secret in the market right now with some of these larger multifamily properties that have been untapped because there's this big barrier entry, but that's for another day. What else you got?
That's about it. Actually, I think I might have had one more question real quick. Oh yeah, so not really too often we talked about, I mean, pieces of tech, obviously we worked on our computers all day, but when you're doing like our listings and like meeting with people, would you say there are like up and coming technologies that you could use to basically benefit like your relationship with the seller buyer like relationship, or even the transaction coordinator like relationship, whether it be you're looking for different properties and there's like a virtual tour so like you can better like understand it that way, or maybe just another technology that I haven't heard of that you've come across within like the past year or so.
Right, yeah. I mean, it's not like anything that's like brand new, mm-hmm. but I think Matterport cameras are really cool because you're able to, you know, scape the entire interior of the property and you don't even have to be there physically. So that opens up a whole new pool of buyers that, you know, might be out of state or unable to get there right away. So something like that's really interesting, between bridging the gap between buyers and brokers. For sellers, I mean, that's old school. I mean, it's really word of mouth. I mean, you got to mm-hmm. stay in communications, whether that's, you know, phone, text, email, whatever it is, but definitely just got to stay in communication as much as possible. I mean, that's really your job as the list agent. Mm-hmm. And then between like transaction coordinators and title companies and stuff like that, I mean, It's still kind of an old school thing. I know that they're working a little bit more towards blockchain, and I think as soon as like title moves to blockchain, that'll be super interesting. I think closing time could be moved up dramatically by that technology, because if you have to go back and you have to run a search and then you have to wait for it to come back, you're doing like the municipal like lien searches and stuff like that, and then there's a cloud on title, and then you got to go clear this up and that up. As soon as you have any of those issues with what's on the blockchain, you'll just go there right away and you'll be able to pull the vast majority, if not all of it, right from there. So that's definitely in the works. Whether that's 5 years down the road or 15 years, it's definitely coming. So that's one thing I've had my eye on for a time. Aside from that, there's things that you and I use as brokers that we've started using in the last couple of years that's been really helpful. But other than that, I mean, not so much for communicating with the client. So aside from the tech side of things, we talked a lot about multifamily, touched very briefly on industrial, but yesterday we went and looked at a motel hotel property in Treasure Island. That's really interesting, doing some renovation work to that right now and looking for potential clients to come in and purchase that. It's a Canadian gentleman that owns it, and he actually prefers to seller finance that. And that was one of the first things he said on the phone when we spoke to him, which you do not get very often. So, he was talking about the Canadian IRS up there and how they're very stringent. So if you come across Canadian sellers, perhaps they're more willing to seller finance than the average Joe. So that's something that I'm going to keep in mind in the future. And then, talking about, I know 3 different industrial groups that are targeting industrial property in Polk because they have a large car, distribution, sales business out there. Also, Publix is the largest manufacturer out there. A lot of distribution jobs between like the farms and the fields and everything else like that too. So, and then of course all the trucking going back and forth between Orlando and Tampa. So it's created quite a hub, and I think that there's still some opportunities to be had out there. Got anything on that?
No, man. I think it's
cool. So we were just checking mortgage news daily, and today's rate was at 6.95, and it actually dropped down about 20 basis points from last week. So I mean, we're right at 7% interest right now, which is crazy because little over a year ago we were still in the high 3s or low 4s, and it's like just crazy to think about that we've almost doubled the interest rate since then. And I mean, that adds hundreds and hundreds of thousands onto people's payments for your typical investment property. And so it's made things tough to finance unless you're putting like 50% down or you're buying it all cash. So it's created opportunities for those who are real go-getters, and for sellers who want to cash out. They're able to look at that and kind of ride the wave while there's still properties appraising at these prices. So
I think when we looked at it through the calculator, the first 15 to 20 years of it, you're basically paying majority interest, and then the last maybe 5 to 10 years, then that's actually when you're paying off the actual principal of the loan.
Yeah, so that's your AM chart, so your amortization. It's basically all interest at first. You're paying almost nothing to principal.
Yeah.
So this was another thing that we ran into. So we do work with buyers who are looking for smaller multifamily stuff as well. And we came across a triplex. It was nice. It was all 2-1 units with garage ports in each one. So each one had its own garage. It's block. It's built in the 80s, I think. It's in a good area too, near Pinellas Park. And we were highest and best on it. And we were accepted. Our offer was accepted, except that they didn't want FHA financing because it has to pass a self-sufficiency test, which is that in order to get an FHA loan, the appraised market rent They also do an appraisal of the property itself. So they appraise the value of the property and what they think that the market will yield for rents. Those appraised market rents have to be 75% of the principal, interest, taxes, and insurance payments. So when you add all of that up together, more or less as your operating expense, or something to factor into your operating expense, but not all of it, that has to equate to 75% of that payment, or otherwise it won't go through. And that's what happened to us, and that is only on triplexes and quadplexes, not on duplexes. So that was an interesting learning curve for me, something that I haven't run into before, and something I thought might be worth sharing. So,
That's interesting.
Anything else on your Q&As?
No, I think we covered it all.
Cool. All right. Well, kind of brief today, kind of going through some things, getting everyone caught up on some of the things we're working on, and we'll continue to send out newsletters. We'll continue to keep you updated, be your multifamily broker. We're also doing tenant rep, landlord rep now as well. A lot of the volume within the brokerage has actually shifted to leasing activity, so we're definitely spending more time and attention towards that as well as multifamily. So that being said, really appreciate you all for watching, and we'll see you on the next one.
Sure.
All right, let's do it.